right, so tonight we got a lot of stuff to talk about, man. We're gonna talk about this $1 trillion that Elon is trying to get up out the market. You got a package of $1 trillion on the way, dog. That's gonna be insane. We're also gonna talk about the Trump dynasty, bro. And I hate to say it like that, but bro, the increase as well by $3 billion since he's been in the market. Since he's been in office. That's insane, right? Then we're gonna talk about something I know people don't want to talk about, man. America versus the people. And we talk about how the American dream is getting more expensive, bro. All right, let's get to it. All right, we're gonna talk about a few things on these charts right quick. They can see my chart, right? Let me know when we're ready. Ask them, is it up? We good? All right, we wanna get to, man, today was a hell of a day, man. Let me say something right quick before we get into these charts, man. So I did something today that was real crazy. Something that I don't always do, but I've done it a couple of times. I laid up there and I did a Oracle call, end of day. I put it in the Patreon, but I didn't put it in the Patreon as a big post. I put it in the Patreon as in the chat. So anytime I do like one of them plays where I know we kind of like, so I told him in the Patreon, I put it in the chat. I said, listen, this is not based on technical analysis. This one is based on the fact that I just feel like Larry Ellison is just a dog. Right? I feel like Larry Ellison is a dog, and I feel like he is one of the CEOs that's just getting the AI trade right. And I gotta give this Trapper her credit. Miss Kim told me about Oracle about 18 months ago in Trappers Anonymous. So she worked with a company. This was like when, maybe a year, about a year and a half ago. This is when NVIDIA was just going crazy. She said she came in Trappers Anonymous and she brought a CEO in Trappers Anonymous and they worked with Oracle and he told us everything that they was doing. I promise you, since the moment she said that, for 18 months, Oracle has just been on a tear. And I did not get in it because I was like, yo, the fundamentals just not there. But this thing just kept running, bro. And I was like, damn. And I'm listening to the earnings calls. I'm like, yo, this is crazy what this stock is on. So today I was just like, man, I'm gonna get in this play. Now, I like Larry Ellison. I think he's a great CEO, second richest man in the world. He's just getting it right. Crazy part was the company had a missed earnings and missed revenue. But the guidance knocked it out the park. So the guidance knock it out the park mean they miss earnings, they miss revenue, but what they saying they about to do that end the year and then going into 26 got the market excited. So it's forward. So the market is a forward-looking mechanism. Whatever you're doing right now, they already baked that in this quarter. Whatever you're doing right now was baked in from the last earnings. So when you get to this earnings, they're gonna say, hey, what you doing moving forward? And he smoked them. He had the gift for gab. He had the gift of gab. And he said, hey, we doing this, we AI, couple $1 billion here and there. What you talking about? I stock up $50-something after the bell. $61 last time I checked. Now, here's the crazy part. Let me just say this right quick. I told George this. George was like, what? Bro, every time I do I think I put like $15,000, $20,000 in this play. Wasn't nothing crazy. If I would have put 100,000 in it, it would have sank like the Titanic. It would have sunk like the Titanic, you hear me? What is it up right now, Sean?
It's at 306.
How much after hours?
It's up, what's that, 59, about $61, $62.
$61 after hours.
Crazy.
That little 20 grand probably gonna be about 100,000. At least it's gonna be about another 60. At least a 60 piece. If I'd have put 100 grand in that break, then I did it short, 30 days. If I'd have put 100 grand in that break, that would have been about, that's a bagger. Damn. But put it in the Patreon, And I told my people, anytime I'm going in deep water like that, I always tell them, hey, don't follow me. It's kind of like, I told them, it's kind of like being in the pool when they say, hey, there's a sign that says there's no lifeguard on duty. Swim at your own risk. You know what I'm saying? I was letting them know, like, hey, there ain't no lifeguard on duty right here. Ain't no lifeguard on duty right there. So some people dropped in, you know. I'm glad they made money. One of my people might be mad at me because I begged her to get out the play. Because I didn't like what she did. So she took her Robinhood profits. She killed it on Robinhood. She took her Robinhood profits and put it in the Oracle play. Now, she probably ain't listen to me. I said, please do me a favor and get out of there. If she did, she cursing me out right now. If she did, she cursing me out right now. Because I just didn't, like, I'd rather you just put some new money in there that you ain't, I was like, oh. So I don't know, you know what I'm saying? But that was Nate. I was talking to Nate when I said that. That was Nate right there. I said, Nate, it's like swimming in the, Nate said, hey, Trap, heavy is the head that hold the ground. He said, because if that shit would have went the other way, they'd have been shooting. Anyway, let's get to these charts right quick, man. All right, so what we're going to do is we're going to look at the SPY. We're going to run through it right quick. We're going to go on a 1 hour, and then I'm going to talk about two stocks that we looked at that I see. We're going to talk about the SPY. So let's go. Let's look at bigger picture. So bigger picture, what we see is, let's just do this right quick. We see we are in an overall... We see the overall uptrend. Do we see that? Overall uptrend, we see that. This is from swing low to swing high. We like that. Swing low to swing high. Of course, we know right now after hours, it's probably ticking up. I should have had my thing on. So we in an overall uptrend. We like that. We not mad at that. Coming strong off the lows. We're going to pay attention to that. That's good. Big picture, short term, it is bullish. Remember, one of the things I always do is when I mark previous day low. Let me mark this out so y'all can see when I touch it. I mark previous day low, previous week low right here. And then previous week high is this right here where our all-time high at. And then I like to mark out the previous day low right here. Then the previous day close, which was here. So that's these two right here. I mark those out. The reason why I mark those out is because it helps me box out what's going on. I need to understand what we're doing. I need to understand where we're going. So up above, we know that we have overhead resistance. It's going to be right there at 652.24, which was all-time high. We know we're going to have overhead resistance right there, so we got to just be careful for that. We know that the market usually, once it falls into that, once it falls into that, you know it's going to push back down, especially with that long wick. That long wick tells us that it was rejected, right? It was rejected. So it tried to get it, boom, then she got out. Then she fell down. So we know that's going to be immediate resistance. Now, the current line in the sand, what I like to look at is a couple things. Now, okay, after hours, we see is at 651.02. 651.02 after hours. Now, here's what I would want us to do. Now, one of the things I want to look at is the line in the sand. So the line in the sand for me going to be the previous day low at 647. Look where you see PDL. Look where you see PDL. That's going to be the previous day. Well, that was yesterday's low. Now, I'm going to tell you how that's going to be really good for me, because if we look at this whole move, I'm going to show y'all something. If we look at this whole move right here, I'm going to bring y'all into a situation. I'm not using that as a diagonal trend line. I'm using that to just outline the actual move, right? So watch this. You see that actual move going up. Now, watch this. One of the things that's important is I want you to look at these different little situations I'm about to point out to us. So one, you have this move right here. Boom, watch how I do this. I'm gonna break this down in boxes for you. Then you have this move right here. Right, so these two moves, what I want you to understand is this move here was the base of that whole rally, right? It's the base of that whole rally. But then what you'll notice is then you get this move here in this box. So once you get that move, we get all-time high, and then we come down. So now when we come down, I'm going to show you something else right quick, because I want to show you how I look at the market and how I go to making plays. I'm going to move this over a little bit. So then you get this. Now, this is going to be interesting. Then you get this. Right? Are we paying attention to the three boxes that I have? The three we see the 3 areas that I have outlined, right? We see the 3 areas that I have outlined. Now, watch what I'm about to say here. It'll really help you out as you move forward. It definitely helps me understand what's going on in real time. So what you see is, I'm going to show you something right here that's real interesting, right? And I'm going to paint it. I'm going to paint the box different. So right here, I'm going to change the color on this. You see that little blue box I have? Well, you have a gap right there. So I'm going to execute that so you can see it, and I'm going to open this up. Open this up so you can see it. So what you have right here is a gap from the day before until here. You have this gap right here, right? And that leads to this box right here, right? So watch what I'm about to tell you right here. From this box, what you have is, what we wind up seeing from here is we get an idea. So this becomes the base, that previous day low, because this whole move right here is predicated off that base. Am I making sense right there? That last piece, this whole uptrend is predicated off this base. So you get the gap up right here. You get the gap up right here. And then you get this downside. This creates a base for us. So this whole move now is predicated off of this. So this PDL, that previous day low, becomes a base for me. So for me, that's the line in the sand. I want to see the S&P stay above 647.24. I want to see it stay above 647.24. The reason being, because if we stay above 647.24, 2 things happen at one time. One, the first thing we see is it stays above our 20-day SMA. So as long as it's above our 20-day SMA, here's what we understand. We understand that the buyers are still in control. As long as we above our 20-day SMA, we know that our buyers are still in control, right? So the reason why I go the way I break it down is daily, so I can see what's happening. 4 hour, I break the day in half, I get a little more data, and the 1 hour is the time frame that I execute on. I cannot execute off the daily because there's not enough information for me, right? I need more data. The daily gives me a bigger overall idea, but now we got to get into the 4 hour, we got to get into the 1 hour because we get to see a little bit more activity. The more activity we can see, it's 2 things that happen here now. Activity equals noise, so now key levels become super important, right? So the more candles you see on the chart, it is giving you more data, but it also can confuse you if you don't have key levels wrote out. So write this out. The deeper you go into your time frame, meaning 1 hour, 30 minute, 5 minute, 1 minute, whatever you're going to, you got to have strategic key levels so you know exactly what you're executing on, right? So we're going to go monthly, weekly, daily, 4 hour, 1 hour is where we make our move off. 1 hour is important because we got enough data. We want to make sure all other higher time frames are in alignment with the 1 hour. If a 4 hour and the daily is not agreeing with the 1 hour, we step back, we don't make no move. We wait till all of those time frames tell us the same thing. Now, if they all telling us the same thing, that means, watch this, the candles are communicating correctly. Oh my God. All right, so if we can use this as a basis, watch this. So we see our base right here at 647.24. We know we good. So as long as we on top of 647.24, we good. Now, earlier I said something to my people when we was on our live, when we did our live earlier today. I said, listen, y'all. I said, if we can get on top of, I said, if we can get on top of 649, I said, we can stay above 649. Now, remember, this is the hourly. I said, we can get above 649, close above 650. Yo, we in a good position. That means the buyers are strong. Now, the next part of this is we got PPI and CPI coming out this week. That's inflation data. That's economic data that can truly change the dynamics of the market. The reason why it can change is because if the data is less than what the market wants, it then sends the market on a downturn. I hope we get that. I hope we understand that. All right, let's go a little further. Let's go a little further. So now we gonna switch off on that. All we doing right here is just we mapping out. And now we know one thing. If we do close below 647, then now what we do know is 645.66 becomes where we really need to stay at. Right? And that's why we have this line at. 645.66. So right now we at 650. Right? 647 puts us below our previous day low. That's our base. If we break our base, we looking for support. We're at 645.66. 645.66. If we go below that, we know we in an overall downtrend because now we've broken our base. Now we're looking at 640 as somewhere to hold us strong at. That's what we're looking for. So all you need to do now is go put your journal together, say, hey, here's my SPY. Here's the numbers that Trap gave me. This is what I'm looking at. Now, for me, I'm not going to trade the SPY because we too close to all-time high. I would need it to break above all-time. Only way I would trade the SPY is if it breaks all-time high and go all the way back up and then use the all-time high, previous all-time high as a support level. That's the only way. Now, let's go a little further. We ain't going to stay here too long. All right, let's go to our Qs right quick. Right, we're going to go to the Qs right quick. We're going to break this down. We're going to make this clean. We're going to make this impulsive. Y'all see, we talked about this yesterday. We talked about this morning to my people. So you like, Trap, what the hell is that long-ass box right there? All right, let's talk about it. So this box, this purple box that you see, is a range that the market had been in. Right, so the Q had been in a range. Do you see that range? Same range. Right, it broke above the range a little bit, came down a little bit. It spent more time in that range than anything else. So what we needed it to do, and I told my people this, I said, hey, we needed to come up out of this range. So here's why we got this mark, Friday's close. It closed Friday at 576.22, which was good. We like that, right? It closed at 576.22 Friday. Now, here's what happened. From there, we see the gap up. Now, you see this little line we got marked right here? You see this circle right here? This is the demand zone. Now, it's not huge. It's a small gap zone. And anytime you get on a chart, you're supposed to mark that out because that means there's some type of liquidity sitting inside of there. There's some order sitting right there. And here's the thing we got to understand about the market. The market going to always, watch this, the market going to always find a way to go get that money because it needs the money to go further. Okay? The market will always magnetize to some type of liquidity because the liquidity fuels the market. It needs more money. Think about it's like a whale. The whale need to get them little fish so it can keep going further and further and further and further. All right? So here we go. We got on top of that. Then we closed yesterday at 579.13. So here's what I told my people. We saw the Friday close at 576. I don't mind it going down back in there to get those orders, but I want it to stay on top of 573.93. Why? Because if it stays on top of that, I'm good. That's my line in the sand. That keeps me right on top of that range. If we go inside of that range, then we know for a fact the sellers have now took away control from the buyers. If we get back in that range, if we get anywhere back in this box, it's a free-for-all, and I want to kind of stay out of it. I ain't mean to do that like that. If we get back in this box, the sellers have now taken control, and we want to just chill. Because it can go from here, and then it can go right back into this liquidity pool, and then from there, it can go back to 559.94. Now, what we see down there is, you see that red line? That red line shows us what? We had an equal low. Equal low always mean what? Money grab. That's more liquidity. So anytime you see equal low, anytime you see equal high, you know what? That's liquidity. The market will always be drawn towards that. So I don't want the market to even put me in that situation. I want it to be here. You see it's close to all-time highs again. What we want to do, all-time highs at 583.29, so that the NASDAQ has room to move around. What I want to see is I want to see it stay on top of 576. That's my number. 576 is my number. I want to stay on top of 576. Worst case scenario, I want to stay on top of 573.93. 573.93, that's right on top of my box. Right? 576.22 is Friday's close. As long as we stay on top of that we good. The most I wanted to come down is 573.60, 573.93. That puts me right on top of this box. That's the furthest I want to go. So I want to use the top of that box. We're going to call that a shelf. We're going to call it a demand shelf. If it stays on top of that box, I'm 100% cool. We want the buyers to defend that box. We want the buyers to defend 573.93. If the buyers defend that, we all right. If the sellers push past that, it's a good chance we're going to fall all the way down to probably about 568. 568 could come down to 566, so we want to just be mindful of that. We want to just be mindful of that. We got that in the chart. We feel good about it. We like it. We see where we going. Let's get some. All right, now let me bring y'all one place right quick before we go about our business. A lot of people been asking me in the group about Palantir. Here's what I like to see. Here's something I like that I really think is cool. If you look at it like this way really helped me out when I was looking at it. This the way I charted it on a 4 hour. I could just go back top of my. All right, I'm gonna show y'all something right quick that's real cool. Watch this. First thing I do when I get on it, I already see consolidation just sitting right there in front of my face. You can't duck it, you can't hide it. It's right there in front of you. Right? About right here. Boom. So we see that. We can't run from it. We can't hide from it. We see it. It ain't even hard to tell where it's at. We can actually come here with it. Right? We can't duck it. We can't hide it. We see it. Right? Now, here's something that's interesting right here. So if we look at this, watch what I'm about to do. And it's going to make so much sense when I do this. Watch this. If I take this from this high and go to yesterday's close, right? This is yesterday's bar. We can see that. We see that? This yesterday's bar. We see the downtrend in full effect on the 4 hour. We see it. Do we see that? We understand that? Now, if we look at today, what happened? I'm going to move this out the way so y'all can get rid of it. Look at that. Take these two candles out of it. Take these two candles out of it. If you look at that downtrend from yesterday, if you look at your trend line, if you're one of those people that like trend lines, y'all know that ain't my thing. If you take that trend line and go all the way down, what did it do? Right? And then I want you to see something that's really, really critical. So I got my 20 SMA on it, right? Watch this. I got my 20 SMA on it. Now, watch this. You got some things that align that's going to be real cool. We got our 20 SMA on it. Look at this. Those two candles jump on top of our 20 SMA. So not only did it break the trend line, it also jumped on top of what? Right? But it's still, watch this. If you look at it, it's right outside our consolidation box. That last candle put it right outside our consolidation box. Right outside of it. That last candle of the day put us right outside of the consolidation box. Both those candles put us right on top of the line. So for me, what I want to do is just be mindful of it. I want to watch it. You don't got to jump and go crazy. If I was to do anything, we already been in it. If I was to do anything, I would do this. Let me see something right quick, and then we're going to go about our business, Jose. If I was to do anything, I would come here. I would take my fib, put it on, boom, high here, bring it down to that. If I'm somebody looking to get inside of Palantir, my move wouldn't be till it closed on top of this 50. 165 would be the line I get on top of. If I'm somebody looking to get inside of Palantir, I wouldn't get inside of it until it jump on top of this 50 right here and close above that. That 50 puts us where? Let me see. 165.95 is probably where I would get in. So if I'm looking to get in Palantir, based on that trend, based on that swing high to swing low, because it's in a downtrend, I wouldn't get into Palantir until you get a close on top of 165.95. That's just me personally. Because not with a wick, it would have to use what's called a candle close. Meaning you want a strong candle close, green close, and then a confirmation candle. If you can get something like this, what we got circled on top of that 50, I'm good. So 165.95 is when I would get inside Palantir. We get a close on top of 165. We get on top of 165.95. Why? Because that means it has now reclaimed 50% of that downtrend. That means it has reclaimed 50% of that downtrend. So if you get a close above that with a candle confirmation the next day, you got your money. So you want a candle close, not a wick. You want a candle close. No, I don't want it to pull back. I would want it at 165.95. That tells me buyers have now taken over. If it hits that 50 and fall back down, that means it's still in the downtrend. That means sellers are still in control. I don't want to be a part of that. That's how powerful that fib work is for you. All right, let's go, Jose. I think we did enough right there. Let's get it, let's get it, let's get it, let's get it. How y'all feel? How we feel about that?
Nah, you cooking. Everybody's like, yo, this masterclass, $1 million masterclass work right here.
You know, we just try to give it to them for free, and I think the best thing we can do is let them see it, right? That's why I like the chart work so much, because we can let our people see exactly what we're doing. We can let them see exactly what's going on, and I think it makes it a little bit, just think it make it a little bit easier for them to see. So now we not just saying buy it at this price, we showing you on a chart, hey, this is the way you look at it.
Right.
This is how we look at it. All right, let's go a little further. Time and all right, bet. Let's go. All right, so watch this, man. Trapp's Millionaire Blueprint. I want to just break this down to you, right? And I think that if everybody follow these rules, right, you'll be good. I want you to listen to me, family. And listen to me well right here. Millionaires are not an accident. They're built by a blueprint. So do me a favor, I want you to do something for me right quick. I want you to close your eyes right quick, and I want you to meet the future version of yourself. I want you to close your eyes and meet the future version of yourself. The version of you that's 10 years from now. I want you to think about what that version looks like. I want you to think about all the great things that you can fantasize of what you looks like in 10 years. And I'm gonna ask you a question. Does that version of you thank you? Is that version of you grateful for the decision that you made today? Or will that version of you send you an invoice? Because you cost you the future. Tonight I'm handing you 5 plays that'll help you decide that. And if you use this blueprint, it'll truly help you out. First on the list is invest early in tiny amounts. And the reason why I say that is because here's the math. Compounding does not judge your income, it rewards your calendar. Compound does not judge the income, it rewards your calendar. And what I mean by that is, doesn't matter how much you start with, as long as the days are ticking and you're compounding the days, the future version of you gonna say thank you because you used your calendar to increase your wealth. $100 a month at 8% for 30 years is $149,000. Start 10 years though, it's $59,000. Same cash, different swings, $900,000. $90,000. But that's on a bare minimum. Here's what I understand about people and I understand about money. Progress is the most addictive drug you can have. Why do people go to the gym and once they see results, they can't stop going? Changes your life. You look at yourself in a different light. Same thing happens when you start investing. The first time, think about people they got some people in the Patreon, their first play was the Oracle play. They like, bro, I ain't never made $4,500 that fast in my life. Now what? Guess what happened? I believe. Dude DM'd me today and said, Trap. He said, Trap, I cannot believe this. He said, bro, I've been with you for about a year now. He showed me his portfolio. He said, bro, I literally made 150 grand in the market, bro. He said, bro, I am so thankful for you. I said, nah, bro, you gotta thank God. Don't ever thank me. But once you believe something, you can't unbelieve it. The market pays the patient, and the impatient pay the market. The market pays the patient, and the impatient pays the market. Next one, man, don't feel downturns exploit them. So you see people getting scared because the market go red. You know why they're scared? Because they haven't been in the game long enough. Whereas I really told us, I came out the gate and said, hey, y'all, it's September. We here. What I wanted to do was I wanted to give birth to you that you ain't had to be scared of September, that you can embrace it, even if it went that way. Even if it went that day. I want you to look at red days as a discount day, especially a red day of 1% or a red day of 2% or a red day of 3%. If you can look at a red day as a discount, then now you say, yo, this is the best time for me to get in the option play. So when people ask me about my oil strat, I'm like, bro, I did not abandon that. On deep red days, I'm getting into play. On deep red days, I'm getting into play. I'm not letting that play pass me by. And we should think about the game like that. Number 3, man, liquidity is optionality. And what I mean by that is, man, liquidity means freedom. Being rich on paper, but being illiquid is like on a Ferrari with no gas. You don't want to just be rich on paper. You won't have cash, you won't have assets, you won't have bonds, you won't have T-bills, you won't have the brokerage, you won't have the high yield savings. You won't be able to have liquidity that you can always use. Never be all in. Be liquid. Have some liquid. I tell us all the time, keep on loading the clip. You never want to run out of powder to let that wealth gun off. So I always say, somebody asked me the other day, they say, Trap, how do I know when to scale my account? I say, listen, check this out. You keep buying one contract until when it's time for you to get 2 contracts don't eat up more than 50% of your account. If you buy 2 contracts and 2 contracts eat up more than 50% of your account, you need to stick to 1 contract. Once you can get the 2 contracts and that still don't equal up to 50% of your account, then it's time for you to get the 2. 3 contracts. Once you get the 3 contracts and 3 contracts don't equal up to 50% of your account, you should get 3. You never should have more, and this is my own personal rules. This ain't nobody else's rules. Somebody else will say 10%, 2%. I'm cool with everybody's rules, but this is my own personal rules. I do not exceed 50% of my account inside of a few. I always need to have 50% of my account on the side because I never know when the market gonna give me an opportunity, and I always need to be able to sling iron. I always need to be willing to go to war with the market. Some days they win, some days I win. I won't win more days than they win. This year, they put me in a little blender, but we still here. I'm still busting at their ass. Pow, come on, bitch, pow, pow, pow. Like Clint Eastwood out here, slinging iron. And at the end of the day, here's what I know. I'm going to win way more than I lose. Because I'm going to always have some type of liquidity. Since we started this account in 2022, I have not added a single dollar in it. Profits have kept me in position. So I want you to say something to yourself. I am the CFO and the CEO of my household. CFOs never let the business run out of cash. The job of a CFO is to look at the money and help the business make strategic financial decisions. We make no decisions in the business if the CFO don't help us make the business decision. That's what you get the CFO. They help you make strategic business decisions that financially align with the longevity of the business. I am the CFO and the CEO of this business. I'm talking about your household. And your job is to never let the thing that prints money run out of money. Number 4, hold assets because they outpace inflation. The more assets you own, yo, the more inflation doesn't become a thing. Think about this. If your money grows slower than prices, then you're going to run it on a treadmill. Then prices going to eat your money up. This is why most people in America have more month left than money each month. Why? Because you're financially exhausted. It takes 4 checks to pay every bill in the house, and you still got more bills left than benefits. Why? Because your money is not outpacing inflation. So what we got to do now is we got to keep buying assets that grow in price. That helps us offset the inflation. Because the one thing we do know is inflation is here to stay. I don't care who they replace Jerome Powell with. I don't care who they replace him after they replace Jerome Powell with him. I don't care if we talking about 15 more of them in the room. Once you get that $36 trillion thing, we know that bill, we know one thing. At this point on, inflation is here to stay. And here's what we know about America. The reason why America is the #1 place to build wealth because we know America ain't never gonna go back on prices. Once they get you accustomed to paying 35 cents for the bag of chips that used to be 25 cents, we'll never go back to 35 cents. And then once they get you to paying 50 cents for the bag of chips that was once 35 cents, we'll never go back to 35 cents. And once they get you paying $1.99 or 99 cents for the bag of chips that was once 50 cents, we'll never go back to 50 cents. No matter even if we can get it for a cheaper price. The new price is 99 cents. You know why? Because you're accustomed to paying 99 cents. This is why our old folks tell us, boy, I remember when gas was such. Yep, it'll never be that again. Never, not never. Because we done got accustomed to paying the 99 cents. So the only way to beat that is by having assets that outpace inflation. By being able to put your money in clever situations. High yield savings giving you 4%. That's cool. I like that. You know why you like that? Because that means you can make money while it's sitting there. I don't have every dollar ain't always got to, but remember what we say, a dollar that's not moving is a dollar that's what? Losing. So 4% means my dollar is moving, even when I got my money in the market. Last but not least, man, they let compounding, not cleverness, make them rich. Bro, we don't got to outsmart the market. You just got to outlast it. You just got to outlast it. You got to be willing to say, I ain't going nowhere. Because here's what we do know. The market goes up 76% of the time. That means you got another, 23%, 0.9% of the time where the market going to whoop your ass. That's part of the game. So you got to be willing to keep buying stocks. You got to be willing to understand what's your trade advantage. And you got to be willing to miss out on a lot of unnecessary stuff. Watch this, y'all. I'm about to tell y'all something that's so gangster. I was so into my church Sunday after church and listening to that message, I watched not one football game. I watched not one game. And didn't feel no kind of way about it. I said, I'll catch one when I catch it. Here's why. Because everybody on that field and everybody sitting in them owners' boxes, they living their dream. You still chasing yours. Everybody in them owner suites, I ain't say suite, I say owner suites. And everybody on that field living a dream. I'm still chasing mine. I'm still positioning myself for mine. Somebody said, Trap, you used to be, I still am. Muslim don't mean number one who submit to the will of God. I submit to the will of God every day, bro. Never stopped. I read the Bible and I still pray 3-4 times a day. Never stop. I'm chasing God, bro, not religion. I'm chasing God. But I didn't care about missing a game. I'll be honest. I think they got a game come on Thursday. I don't care about missing it, bro. That's how much this mean to me. And I'm not talking nothing about no man and none of that. And I'm going to catch a game. I ain't tripping. Sooner or later, I'm going to catch one. But right now, I got to be in a chart so much. I got to be learning so much. I got to be reading so much. I'm still in my buying hold so much. I feel like I'm buying hold so much and I forgot some of my fundamentals. So I'm doing both. I'm building my business out. Bro, I'm helping. Man, I'm restructuring my brand. It's a lot of stuff I'm doing. I got to get the stuff in China. I got some new apparel coming. We got to do that. We got so much going on, bro. Listen, I don't got time to be watching football for 3 hours. That's 3 whole hours. What could I be doing in 3 whole hours? That's an hour reading a book. That's an hour reading a word. That's an hour charting. That's it. And before I leave, I want to say this about that too. There's only about 10 days in the market that is responsible for about 70% of the return. You got to be in the market on them 10 days. Say that again. The market only has about 10 days in it that make up for about 70% of the return. I'm going to tell you 2 days this year that made up for the 10%. One, the day Donald Trump said, buy stocks. We ain't never seen a 10%, 10% day. 10% day. Pew, out of here. That was one of them right there. Then later on, he said the deal with China pushed it back down. Pew, we got like 5% that day. That's 2 days right there, 15%. The market up right now about what, 10%, 11%? It's only about 10 days in the market that make up for 70% of the returns, y'all. You got to be in the market on them 10 days. So in order to do that, in order to be in position and not, because here's what happened. When you miss those 10 days, we go back to what we talked about earlier. Now you chasing because you ain't in position. You over here, now you trying to catch it and you run into a damn brick wall. Let's go a little further, man. All right, let's get into it. Let's get into it. All right, so here we go. The AMAT play, we just getting beat up on that. The next play, AMAT, we getting beat up on that. I'm okay with that. Our next play is the play I put in this morning in the group. ASML, George was scared, y'all. Let me put him out there. That sucker was scared, you heard me? That sucker was scared. That sucker said, man, I saw the price on that, dog. Somebody say, man, Trap, stop the show till we get the likes up. Hey, y'all, let's get the likes up. Come on, y'all, we at 29.9. Let's get 3,500 people.
Shout out to Eugene. He been putting the super chat. He like, hey, y'all ain't listening. Let me put
Shout out to
the super
Eugene, man. Shout out to Eugene, man. He said, Trap, stop the show. Let's get the likes up. All this free game, all this game. Come on, Trap, yo. Let's see, the chart whisperer. Shout out to Eugene, man. Let's get the likes up, yo. We got 3,000 people in the chat. Let's get us up to 3,500, y'all. Y'all know what we like to do, y'all. Right? Y'all know we just come and give game. We ain't come here to play around. You know what I'm saying? Jose, I saw the Denzel movie that Jose did with Spike Lee. Definitely, it's no good.
I thought it was all right.
All right.
If we had time today, I wanted to talk about the Katrina doc.
No, I don't want to talk about that.
Crazy.
No, I don't want to talk about that.
I should have called you. Anywho.
Nah. All right, let's go. So, play we put in a day, ASML. The reason I'll give you a little bit for why, Varese, thank you, family. The reason why I put this play in, I have been watching the play for a minute. Actually have been watching it since it was about $700. Watching it move up. It's really an expensive play, but the semis was just getting whipped on. But it was slowly moving at its own pace. Remember, this company is the company that make the machines that make the machines that make the dang on chips. You hear me? So they necessary. So I'm watching them move. And today I was watching it this morning. I had a price on it. I said I needed to have a strong push above 800. And so what happened was it got to like 802 early this morning, but I never let that morning bell get me. That 9:30, 10:45, I don't never let that get me. I just be watching. So it shot up to 802, and I was just like, bruh, damn. Then it shot back down to 796. And I said, if it shoot back down to 796, I said, if it come back to 800, I'm going my move. Got back to 800, all had the play ready, got in it. Let me tell you another play that pissed me off this morning. This morning, I was looking at UNH all weekend. All weekend. I'm looking at it. I had it charted out. I said, hey, if this sucker do what I think it's gonna do. Because mind you, my biggest battle right now is trading companies that ain't the best fundamentally. Right? You know, that's been always my thing. If it ain't fundamentally sound, I'm not gonna trade it. But now the more and the more and the more I get to read, I'm like, bro, I could care less on the trading side. You know what I'm saying? Like, if I can read what this thing about to do, I'm going my move. Like, because I've missed a lot of moves because I'm married to that philosophy. You know what I'm saying? Because I'm married to the philosophy of, if it ain't a good company, I'm not even trading it, right? That's just been my philosophy. When in actuality, like, who cares if you can read what it does? If you can read what's going on, it is what it is, right? You know what I'm saying? So I'm like, oh. So I've missed out on companies because of that. One, I see it, and I'm like, bro, that ain't no good company. But this ain't buying whole, Trap. It's not buying whole. So anyway, I'm watching the company, man. And so this morning, I said, if this thing jumps above, like, I think it was like 305 or 307. I was like, if it jumps on top of that, the thing jumps to 314 this morning. Watch this, bro. It jumps to 314, and I said, this is insane. It was a $14 move at 1030. So I said, all right, this is insane. This is asinine right here. Right? This is asinine right here. The stock dips down to $8. Look what I do. I say, this the one. It's still above the price that I had charted it out for. Look what I do. I put the play in. And said, I can't do it. I said, I can't do it. Fundamentally, it ain't it. I said, I can't do that. Because in my mind, fundamentally, this is trash. But at 260, it became in value. It was at 260, it was trading what it was worth. Right? At 600, it ain't worth that. 500, it ain't worth that. 400, it ain't worth that. But at 260, it then became undervalued. So now it's trading in that value range. So I'm like, man, I ain't doing that, bro. Say, bro. I went and did what I had to do and come back. The thing was up $29. I said, what in the bejesus? Whoop-de-doo. I said, God, my God. I said, and I just said, you know what? I ain't tripping because I stuck to my guns. But I know my flaw right now is I got to get out of, and because I know I can take a fundamentally sound company that's really good fundamental, like they recover so much faster than a company that's not fundamentally strong. They just get beat up on you like, it ain't, you know what I'm saying? So anyway, here we go. So ASML, we put that play in today. Costco, we see you. Meta, shout out to my people in the Meta 800 call. We fought back. Netflix, our Netflix call, fought back. Our NVIDIA call, NVIDIA 21, that was a short-term play, fall back. Up after hours, after NVIDIA said we bought more CoreWeave, a CoreWeave option might be in the future for me, bro. NVIDIA bought more CoreWeave. CoreWeave is up after hours. Listen, I'm on that type of train right now. Trap, UNH is a good company fundamentally. No, it ain't. It's not. It's not. Our NVIDIA 200 call, we coming. That go to Oracle call, the one that got George mad, the one we put in at 3:30 today. All right, it was up $100 when I put it in, and when I closed the day out, it's up 20-some%. I got about 13,000 in that thing. I think that might be something. 20-some% after hours. We ain't mad at it. Let's go a little further. All right, PANW turned green on us. We love it. Palantir. Now, the Spotify play, so we in 2 Spotify plays. Well, this a old Spotify play. I'ma kill that play in the morning. The 650 call, we was in that play long time ago. That was like our first Spotify play. I done ate so much off that one, it's a shame. So I'ma kill that one in the morning because it's over in October. But the 720 call was our latest call. We only down $100, and then Visa. So we cooking right now. We cooking. We shaking back slowly but surely, man. We turning green. I like it. So let's go, man. If you want to join the Patreon, come join the Patreon, man. Y'all see the link, man. Let's go a little further. All right, Freedom Index. Let's kill this. Let's run through this right quick. All right. Somebody say, Trap, that APH was a gem. Salute. You got out the Apple call? We been got out the Apple call. We got the Apple call and missed that damn big $7 run-up. But they gave it back. So now I ain't mad about getting out of it. Yeah, so AJG. So Costco, we that. Crowd, CVLT, Goldman Sachs. Bro, Goldman is so close to all-time highs and it broke it. That's why I can't do it. Meta, Netflix, NVIDIA, Palantir, and Sprouts Farmers Market. So I'm still in the 2 that I've been telling y'all for, but somebody say, bro, you still in that? Damn. Yeah, man. I'm still in, man. Al Bundy tuning in from directly behind the wall in real time. Salute, family. We appreciate you. Jose, let's get some knowledge, man. Let's give him some game. So I want to start off today by saying something that was on my mind not too long ago. I want to say that true wealth is about positioning, and it's not about chasing. True wealth is about positioning and not about chasing. So a lot of times what I've noticed is on this journey, we can see people making money and we can feel left out. We can see people building businesses and because we not doing what they doing, we feel left out. We can see people making money in the market. We can see people getting raises. We can see people doing so many things, and watch this, their wins influence our next move. And that's where we go wrong. Another person's moves should be inspirational, but not influential to the point where it causes us to move prematurely. So when you see somebody win, it should just show you that it's possible. It should not influence you to move prematurely, because when we chase something, we actually get out of position. I'm gonna say it again, right? Because I want you to sit on that one. When we chase something, we actually get out of position. Let me show you how that makes sense. Right here. You can be sitting down, you can be positioning yourself for something, you can be preparing for something, and then when you see somebody else do something, now you've got interested, and now you go there, and then when you go there, you miss the thing that landed here, and you say, damn, I should have stayed over there. I should have stayed over there. All right? I should have stayed there. I was just doing. Man, I had that idea. Man, I've been thinking about that. Bro, before I did this, you moved out of position. You went chase something that didn't have your name on it, so you missed the thing that was destined for you. You chased something that didn't have your name on it, so you missed what was destined for you. Each and every one of us got a calling. Each and every one of us got a purpose. Matter of fact, I'm gonna go a little further. Each and every one of us got a specific assignment that is assigned to us at birth. But what happens is we start seeing what other people are doing inside of their assignment, or what's deemed inside of their assignment, because what we really not realizing that there's a bunch of people chasing everybody else's dream but their own. There's a bunch of people that substituting themselves in somebody else's assignment, but not realizing that the assignment that they chasing ain't even there. So now you're not only chasing someone else's assignment, you're chasing someone else's facade of an assignment. Oh, that's good. That's good. So now you got two people chasing something that's not even theirs. And so now when your failure hits hard because the thing that you left over here now starts to bloom. And now what happens is you try to run back over here, but guess what? The assignment has moved. Guess what? The X that marks the spot has moved. And so now you got to reposition. And the thing about repositioning is, now in order to reposition, you got to cultivate another spot. So the problem is we keep having to cultivate. You keep saying, man, I keep having to start all over. The reason why you keep having to start all over is because you're not disciplined enough to wait on a thing that was designed for you. And so then the pressure starts mounting. See, here's what happens. The more times that you miss the moment, the more times you now put more pressure on you because now it's taking longer. Let me say something to you. You got to kill the quit, or the quit gonna kill the dream. You got to kill the quit, or the quit gonna kill the dream. You got to stop quitting. You got to stop letting the pressure fold you. You got to let the pressure build you. You got to let the pressure mold you. You got to let the pressure make you. I want you to understand something right quick. Gold only gets its value by how it stands in the fire. Diamonds only become precious by how much pressure they take. You are only worthy of the assignment when you look at the adversity and say, this is a prerequisite for me being great. Let me tell you how that's so good. One of the things I like to do in my spare time is watch National Geographic and old boxing matches. One of my favorite boxing matches that I ever watched is Thriller in Manila. It's one of my favorite boxing matches of all time. Now here's the thing about that boxing match. Both men were put in adverse situations. They were in Africa, it was hot, and it was early in the morning. And unlike today, they was fighting 15 rounds. Two men that were actually familiar with each other. Two men that were actually familiar with each other. So actually what that mean was they got in the ring on level playing field. Nobody had an advantage. Nobody had an advantage. So that means this situation only boiled down to sheer want to. That's it. Sheer want to. The men been at battle, they've been at war. Punching on each other, hitting each other with their best shot, leaning on each other, sweating on each other, breathing on each other, fighting each other, tussling with each other. 15 round came. Watch this. At round 15, Joe Frazier was actually slightly ahead of Muhammad Ali. But guess what? They get to the corner, they sit down. Philippines, I'm sorry. They sit down. They sit down. Ali looked at Frazier. Frazier had his head down. Ali said, I was thinking about quitting. He said, I never got hit that hard that many times, and I was dehydrated. Ali found a way to lean on the ropes. Looked over at Frazier. Frazier said, I can't get up. I said, I can't get up. He said he ain't had no more left in him. He said, I ain't got no more left in me. Ali won not because he was better than Frazier. He won. He won just by being willing to kill the quit and not let the quit kill the dream. So they asked Joe Frazier years later, what is one thing you regret in life? He said, my biggest regret was throwing in the towel against Muhammad Ali. The crazy part about that is he died with that regret. He died with that regret. Still a great fighter. One of the toughest men to ever box. But he died with the regret of all I really had to do was get up. Get up. So I'm telling you this. Sometimes, in order to win, you just gotta get up. In order to succeed, you just gotta get up. In order to be great, you just gotta get up. Ali said, hey, watch this. I really didn't want to get up. But you look over and you say, I just wanted a little bit better than him. I don't want it a lot more than him. You just needed a little bit more than the person across from you. You just needed a little bit more than the last time it happened to you. You just needed a little bit more to make the next play. You just need a little bit more. Get up. Here's the thing though. Ali didn't run across the ring. He just got up and got in position. He just got up and got in position. He didn't run over there to Joe. He just got up and got in position. Sometimes all you gotta do is get up and stay in position to be victorious. Sometimes all you gotta do is get up and stand up and be in position to be victorious. Sometimes the championship that you're waiting on, sometimes the biggest win in your life is all about you getting up and being in position. It ain't even about you running across the ring. It ain't even much about you attacking. Watch this, man. Sometimes it ain't even much about you having a game plan. The game plan is I'm showing up. That's all I got. I don't got nothing else. I don't know how it's gonna get done. I don't know what the game plan is. Watch this. I don't got a business plan. I don't got a tax strategy. I just got up. I know I want it. Sometimes it takes for you to get up. The problem is every time you get knocked down, it get harder for you to get up. Instead of saying it's good for me to get up, I'm ready to get up. It's this prerequisite. I gotta get knocked down. I remember I said to people, I said, listen, in order to make $1 million, you gotta lose 100,000. They were like, what, 100,000? How? Get up, Trap. In order to make a couple million, fam, you gotta be willing to lose. Get up, Trap. In order to make 10 million, Trap, you gotta be willing to lose 1.5. Lose the 1.5. I know 10 on the way. Get up, Trap. Get up. It's the only way you're gonna get there. You keep worrying about what it costing you to lose. Watch this, man. Oh, this be so good. You keep worrying about what the price is that is costing you to lose. But here's what I want to tell you. The cost for not getting up, the inflation and interest on not getting up is worth a lifetime of wealth. The taxation on not getting up, the taxation on regret, the taxation on moving, the taxation on missing the call, it's a lifetime of wealth. You gotta get up, man. You gotta be in position. Don't chase it. You gotta get up. Be in position. Yeah, it hurt. Yeah, the play down. Yeah, the business done fell. Yeah, you got confusion going on. Yeah, you feel like this the season where, get up. Just get in position. Stop trying to figure it out. You exhausting yourself. Watch this. I'm about to tell you something. I think it's Proverbs 21:5, and it says something real similar to what I'm about to say. It says that the diligent, it's about to be good. The diligent will surely be abundant, while the hasty make room for poverty. The diligence, consistently getting up. I'm diligent at getting up. I'm cool with being knocked down. I'ma get up. I took the loss, I'ma get up. This thing go my way, I'ma get up. Got in a wreck, I'ma get up. This going against me, cool, I'ma get up. The diligent. Your plan shall surely be abundant. That means you gotta just keep getting up and being in position. But the haste, always gotta do something. I gotta do this, I gotta do that. He doing this, they doing that. She doing this, she doing that. He doing this, he doing that. I ain't doing nothing. You done put all that money in all these different things because you chasing. But you disguising your chase as I'm grinding. You disguising your chase as I'm getting to it. You disguising your chase as I'm active. No, you busy, you chasing. You chasing. Instead of just being in position. Instead of just saying, hey, what's for me got my name on it, and all I gotta do is be in position. I don't gotta trade every day. I want the ones that got my name on it. And guess what? All of them ain't gonna go right, but I'm gonna learn something from it, and I'm gonna get better. And I'm gonna keep getting better. Because it's a lifelong game. Watch this. It takes a lifetime to master life. It takes a lifetime to master life. And you trying to get it right in 3 to 5 years? It takes a lifetime to master this thing. So today, I want you to be in a mindset of, we ain't chasing. We just getting in position. It's your boy, the Wallstreet Trapper, man. Let's go, man. Episode 159, Jose. Let's go, man. Let's go, man. Let's go, man. Let's go, man.
First and foremost, man.
Go, bro.
That was crazy. I know Benton was mad that we went over the time, but I wasn't.
Sometimes it got to be like that.
Hey, you know.
We ain't worried about that.
That, boy, it was so many in that one. You know what I'm saying? Oh, yeah, no, I got you.
Yeah. That's good, man. We here, man. We here. We love. We like it. Episode 160.
Mm-hmm. No. You
159.
159.
159.
We? Yeah, we got you.
Yeah, 159. I'm in the future. I'm in the future, dog. How you feeling? Let's shout out our people right quick, man. Carolina Blue was at it, man. Michelle Booker was good. Natasha Feeney with Big Dot was good. Trey Mozzie, I think I said it right. That's good. Lisa was good, Queen. Red shit was good. Double R, I see you, family. Cheesy Bread, I see you. First Generation Millionaire was good. Salute. Shazam X, I see you, bro. Thank you every time. Alex Vegas was good. Dancing Diamonds was good. Josh Young, I see you, man. Pat Davis, I see you. Legend Taylor was good. I see. KT, Tactical was good, family. I see my people in the building. J Lex was good. Reggie was good. Max B, I see you, family. Frank Treyes was good, family. I see y'all. That one guy was good, family. Hector was good. Cedar Bush, I see you. Jay Mills was good. Chelsea was good, family. Nat was good, Queen. Man, I had hey, bro, listen here. Tamara Buchanan was good, family. I see y'all in the building. Patreon, I see you in the building. Trappers Anonymous, I see you in the building. I see my people, man. I see my Davion, what's good, family? Autumn Phoenix was good, Queen. Shelly Book, I said you once, I'm gonna say you again because I see it. Zoe was popping. Anthony Carmichael was good. Rudy was good. Tyson Peace was good. Big Bell was good. CP Always was good. Larry Morgan was good, OG. Fat Boy, I see you. Freddie Dukes, I see you. Big Vince, I see you. I see you. Idris Lawrence, I see you. I see you. Vital Vibes, I see you. Come on, man. I see my people. All right, I'm good. I'm gone.
So you saw your girl in the chat, and then you was about to say something.
I just had a dope lesson with my girl, bro.
Mm-hmm.
You know, I just gotta say this right quick, man. Man, so listen. You know, I'm learning a lot in this relationship. Right? A lot by myself. A lot of stuff don't always go like as planned. But I realized, so I bought my girl a book. I ain't gonna go into detail. I bought my girl a book, man. And when I bought her the book, I said something. I said, man, you didn't read the book, man. I always buy her books. You know, she be doing a lot. I said, man, you didn't read the book, but that really hurt my girl's feelings.
Mm-hmm.
It hurt my girl feeling that I said she ain't gonna read the book. I didn't realize how much she looked up to me in business.
Mm-hmm.
She see the work I put in.
Yeah.
Learning, growing, evolving, building, leadership. How much I be in my own thing, bro. And so she, you know, we had a conversation and she was just like, man, I don't really think you see me when it comes to business. I don't really think you be seeing me. I don't think you really be hearing me. And I'm like, what you talking about? I'm doing this, that. But I didn't realize how much she admires me. And that's what you want. As a man, you want a woman that admires you, that can take your leadership, that wants to keep evolving, right? And you pushing her, right? So I was like, man, man, like, man, you tripping, man. Like, I'm doing this. Of course I see you, you know what I'm saying? But she said something to me. She said, you really don't. She was like, I see the way you have conversations with other people in business, and I see the way we have conversations. Threw me off a little bit. And it made me replay what I saw. So, you know, we talked later that night and, you know, hugged her, told her we were gonna be all right. And I got up that morning, I was listening to Darius Daniels. I was listening to this thing he said the day before in church, and he said, a person, he used a person analogy, but he was talking about God. He said, a person operates different when their love language is met, right? But he was talking about God.
That boy be cooking.
He was talking about God.
Mm-hmm.
So I sat back and I said, wait, because I get up in the morning, 5:30, 6 o'clock, my first hour and a half is about reading the Bible and reading the word, praying. And I thought about something. I said, wait, my girl told me I don't value her perspective in business. It's not about what I heard, it's about what she said.
Yep.
So I had to ask myself, damn, what have I done to make her feel like that? Because you can't negate the way you make somebody feel. right? And you can't disregard how a person tells you, this is how I feel. No matter if you meant to or not, you can't disregard it. So I sat back and I said, oh, I see what happened here. When I'm talking to other people about business, I'm in it. But when she talked to me about business, I just be like, all right, bet. But what happened was a couple times we talked about business, and she kind of got upset about what I said. But my way of when somebody talk to me about business, I want them to talk to me hard. Like, give me the truth, right? But that's me. So I'm like, oh, I see what happened here. My communication to her was like, I want to be talked to. I don't got to sugarcoat it, but I got to change the way I talk to her and respond to her when it comes to business. Because I'm like, man, business is a gladiator sport, man.
Mm-hmm.
What you talking about? It's a blood sport.
Yeah.
Come on, man. What you talking about? I did that. She's like, bro.
Knives, all that.
So I said, all right, bet. So I called. I said, babe, check this out. Early in the morning, she was on her way to work out. I said, listen, I heard you. I heard you last night. I gotta do better at one, hearing you when we talk to business, when you ask me about business, because I see how you look at me in business, but also I gotta do a better job at communicating with you. But also, I gotta do a better job at making you feel heard when it comes, because everything else we talk about. But I said, I gotta do a better job at making you feel heard. So when we talk about business, I gotta give you the same energy. I gotta be into it. I gotta listen. I said, because I didn't realize how you look at me in business. I didn't realize that, honestly, even though you doing your thing, my girl makes 6 figures on her own. Without. I told her something, she started laughing. I said, hey, listen to me, I do respect you, because they got women out here doing some weird shit for some money.
Right.
You got a legit business, you really making 6 figures. Like, I said,
crazy.
I gotta do a better job at honoring you that you do that. I gotta be a better partner at listening to you when you tell me that. When you wanna talk about business, I gotta sit down, because she'll be talking to me about business, I'll be like, yup.
I already know, that's how you be here.
That's how I be here. But I'm like, no, that makes her feel unseen. That makes her feel unheard. So when she talked to me about business, I gotta be willing to put that down and say, hey, or if I don't have the time in the moment, I gotta be willing to say, hey, babe, give me like 2 minutes, let me finish this so I can get to you. So now I'm communicating, hey, babe, give me like 2 minutes, let me finish this, and we could talk about it, right? So that, and it was just a thing, and she was like, babe, man, she was in tears almost. She was like, man, thank you so much for that, man. I can tell the last couple of days she's just been, and I've been like, what's up? Tell me what you got going on. Talk to me, I want to hear it. You know what I'm saying? Just that changed her energy, bro. So I wanted to share that.
I gotta send a virtual hug out to my
little
sis
broke
right
moment
now.
for me, man.
You know what I'm saying? Virtual
what I'm
hugs
saying?
for my sis. I see you.
Yeah, I just wanted to cut that out. All right, let's get it, man. Let's get to our show. All right, man, so listen. All right, check this out. So, Apple just changed everything. Now, my thing about that is this, and I'll just be honest with you, I'm not gonna lie to you, I'm not going to sugarcoat this for you. I want to speak to you directly from my brain. Man, them people don't care what Apple just did. They don't. And here's how we know they don't care. The stock went down after hours. Because Apple, you keep on making bigger screens. You keep on making thinner phones. The people won't know where the AI at. That's what the people won't know. You behind. You behind everybody. And I get it. The idea is you want to do it and you want to do it right. Apple, the people don't care about the iPhone 17, Air Pro, the iPad. Apple, the people don't care if you got a vapor chamber that cools the phone down faster. Nobody cares about the vapor chamber that cools the phone down in the device.
It's
Nobody,
a fan.
Huh?
It's a fan.
That's called a vapor chamber.
Is crazy.
Yeah, that's what it's called. It's called a vapor chamber that cools the. Nobody cares about the Apple. Nobody cares that you got a new battery that lasts. Listen, if the phone got AI, we don't care about the battery, bro. We already accustomed to y'all letting our battery run out fast anyway. Apple, the people don't care if you got a new camera. You saying you shot the whole Apple AI 17 commercial, the event. They say, yeah, we shot the whole event with a 17. We don't care. Apple, we don't care if you got dual camera video. Nobody knows what that is anyway. We don't care. I'm just a person that uses my phone. We don't care if the Apple Watch has SE3. We don't care about that. Apple, we don't care if the watch has a Series 11. Apple, we don't know what Series 11 is anyway. Apple, we don't care if the watch has Ultra 3. Apple, we don't care what Ultra 3 is anyway. Apple, we don't care about the AirPods 3. You know why? Because we lose them anyway. You already getting the money. We lose them, we buy some more. We lose them, we buy some more. After the 5th time, we just go buy the wire ones. We don't care. Apple, we don't care. We the people don't care. What we want to know is, where is the AI? That's what we want to know. So they don't care if you just dropped the largest battery ever, over 5,000 mAhs. We don't care if the cooling thing can be reserved by a gaming PC. We don't care if you want to turn an iPhone into some type of task rabbit. We don't care if the event was filmed by the iPhone 17. We don't care. Hollywood technology is now sitting in your pocket. We don't care. We ain't Hollywood, Apple. We don't care. Add the Ultra 3. We don't care if it is now Apple Healthcare. We don't care. We eat bad. We don't work out sometimes. We don't care. Processed food is at an all-time high. We don't care, Apple. All we want to see is, where is the AI?
Did you say Apple Healthcare?
Yeah. We don't care. We don't care. Apple, if you coming out with a folding phone in 3 more years, we do not care. Where is the AI? Can Siri change the conversation? Apple. My damn.
Is that Siri talking to you?
Siri.
You done called her up.
I called her up. Where is the AI, Siri? Where is it? We don't care, Apple. And the stock is showing it. Apple, Tim Cook, pull off of Mark Zuckerberg, bro. You got all that money you sitting on. Go pay them people $100 million, $120 million, $90 million, because the people want to hear Apple AI. That's what we want to hear. As a stock investor who has over 2,000 shares of Apple, I want to hear AI, Apple Intelligence. I want to hear it. I do not care if the battery is the biggest battery ever. I'm going to find a way to run it down. It's what we do. I'm going to put 50 million apps on it that I'm probably not going to use, but they look cool. They're going to run my battery down. That's okay. But if I'm using an AI, I know it take energy. Apple, we don't care. Where's the AI? That's all the people want to know. Go buy Perplexity, bruh. Go buy it. You got enough money. Start using the Mark Zuckerberg method. Go buy other companies. What is you doing with all that money you got? Go buy it. You failed on a car, you failed on the glasses, Meta whoop your ass on them glasses, you try to block the man out with the ads, the man come up with something else. You better do something. We tied. We tied. We don't care. Let's go forward. Labor crash. So I want you to understand this. This is a big one right here. This is the one that I think that we truly all should pay attention to, and here's why. Because labor is serious. So watch this. The Bureau of Labor Stats just revised 911,000 jobs we missing, making this time the worst revision in history. In this period, over 50% of all reported jobs created didn't actually exist. The second worst revision, say that again, the second worst revision was during the great financial crisis. Here's what I want us to understand, family. This is why the market is so important. This is why we got to become investors. This is why we got to become traders. This is why we got to learn how to create business. I want you to understand something. I did a search the other day, and it said that over 41 to 50% of the jobs created in America is created by small business owners that own anywhere between 1 to 4 people. I mean, that employs anywhere between 1 to 4 people. Listen to me. Listen to me well. Everybody not made for entrepreneurship. I get it. But you better learn how to trade. You gotta learn how to trade. You gotta learn how to invest. You gotta learn how to, and I told somebody this the other day. I said, and I quote, this is the easiest time in America to make money, but it's also the time with the most distractions. And the reason why you can't focus on trading or making money is because you're too distracted. What it takes to be successful, and that's why I always tell, like, when I'm talking to people, and I'm like, bro, like, you gotta be focused. Entrepreneurship, gladiator sport. Trading in the market, gladiator sport. Watch this. Watch this. Going to work every day gives you structure. I would never, ever downplay a job. But you should be using the money from the job to invest in something. For me, it's the market. 80% of my money goes to the market. So you need to be learning and taking this serious because we see what's happening. And I want you to understand something. Watch what else is happening. I'm gonna take the glasses off of this one. Amazon right now has 1 million robots in their warehouses. They now have more robots than people. It's gonna start in the industrial and the manufacturing space. Watch this. It's gonna cut down on labor. It's gonna cut down on expenses. It's gonna give them more productivity. So in a little bit, certain jobs, not all jobs, will be non-existent. And if Amazon has 1 million robots, don't you think other companies are gonna follow? Companies are now putting robots on customer service, customer care, customer experiences. So that means call center jobs ain't safe no more. That used to be the thing you can go to. Now we're gonna call center. Well, cool. They putting the robots there. AI agents. You shooting it right now. So that's gonna be gone. And remember, it's getting so real, like when you can say, hey, you a robot? You an AI? And they gotta say, yes, I am an AI. I'm just telling y'all. Let's go a little further, man. All right, so welcome to the party, man. I think this one is clutch. I think this one is key. I think this one is essential for us. So watch this, y'all. We got some new boys just came. Welcome to the party, man. Right? So when new players enter the S&P, it's not just a party, it's a shift in how trillions of dollars flow. I want you to understand some companies like AppLovin up 534%. In 1 year, companies like Robinhood up 497% in 1 year. Companies like EME, remember we had EME inside of our portfolio last year, up 71% in 1 year. Look who got kicked out, right? MKTX got kicked out. Caesar got kicked. Enphase Energy got kicked out. Because of this, trillions of dollars of passive funds automatically buy these companies. That means billions of dollars of fresh demand for stocks coming overnight. And we saw it. Soon as AppLovin, soon as Hood got into the S&P, what happened? Boom. Same thing happened to Palantir. I remember I said, yo, we said it on the show. We said, yo, once Palantir get in the S&P 500, it's a game changer. It went on a run. Watch these companies do the same thing. Watch these companies do the same thing. Watch these companies do the same thing. And remember what I said. We talked about this a while back. I said this maybe like a month or something ago. I said, Jose, Robinhood is it. Everybody like, what? Trap, why you? I'm like, hey, I see what they doing. I did the research. I'm not saying that some people ain't been on it. I'm 100% not saying that. I'm saying it came a moment like early, I said, wait, hold up. Let me look at this age bracket they're doing, 18 to 32. And last year, it was about $4,000. This year, the average person now has $10,000. They gamified it. They don't even care about I say, hey, this it. App loving, that's one of my favorites. It done shook off that fuzzy panda news that it had. Welcome to the party. Fintech is definitely gonna be it. Shout out to my people that's rocking with why most S&P companies cost so much. I don't think they cost so much. I think that your view on money needs to be altered. Let's go a little further, man. All right, let's talk about it. Buyback. So now this one is gonna be critical. I want you to understand something. We talk about big buybacks. We talk about company power. What if the companies are quietly making you richer without you lifting a finger by buying back shares? Right? Essentially, what a company's doing when they buy back shares is they're taking money to take stock off the market, which increases the price. Does that make sense? So it's just like us buying stock. So because when we buy stock, we take money off the market. We take stocks off the market. We put them in our account. The more we buy, the more the shares go up in price because that demand is coming off the table. I mean, that supply is coming off the table. So what happens on the next side of that is this. You got to ask yourself this question, right? A company is taking the free cash that it has to buy back its own stock. So if me and you buy stocks, that ain't nothing. But you think about a company like Apple, $100 billion in buyback announced in 2025. They're not going to buy that all at one time. They may spend $25 billion here, $25 billion here, $25 billion here, $25 billion here. So they'll spend $25 billion within a year and then come next year and do another buyback. So now what they're going to do is when the stock, right? When the stock goes down and they feel like it's cheap, that's when they're gonna buy more. They might spend $25 billion and the stock go up. That make sense? So actually what happens is companies be buying a dip on their own stock. Oh my God. That's it. That's what companies do with share buybacks. They buy the dip on their own stock. So you got to think about it. Every buyback reduces the number of shares, which means each share you represent in ownership now gets more in money. Think of it like this. You're getting a raise without even asking for it. Buybacks become what?
So I'm hearing the good. What's the other side of it?
There's no other side.
So it's win-win across the board.
Of course. Because they taking their money to buy back stock. The only bad side can be if a company buying back shares at all-time highs. You got to think about it. Let's say you've been working with Apple for 10 years, right? So you probably have a freaking 100,000 shares, right? But if they're buying the shares at an all-time high, then what they're doing now is they increasing the price while it's already high when they're supposed to be buying it at a low to keep it at a value rate. So they can be, this is why you see companies this is why you see CEOs selling shares. Like, bro, I got 2 million shares of Apple. No, I don't. I'm saying, I got 2 million shares of Apple. If I sell $100,000 worth of Apple stock, 100,000 shares of Apple stock, I got to put some of that cash in my pocket. I mean, it look good on paper, but I won't put it in my pocket. I take 100 grand, I take 100,000 shares, that might be a couple $1 million, a few million. Should I put that in my pocket? You got to turn the digital money into physical money at some point. Right? You got to turn that into something. So I'm not mad at it. So look at it though. Apple, $100 billion buyback. Alphabet, $100 billion, $70 billion. Nvidia, after earnings report, is $60 billion buyback. JP Morgan Chase, $50 billion buyback. Goldman Sachs, $40 billion buyback. Wells Fargo, $40 billion buyback. Bank of America, $40 billion buyback. I want you to see what you see. Who got the most in here? Banks. 50, 40, 40, 40. Visa, 30. Citi, 20. Bookings.com, 20. Morgan Stanley, 20. The bankers got the money. The bankers is buying back the stock like crazy. What better way to keep your stock at a nice price than to buy? So this is what we gotta learn. This is a whale right here. So I love when a company buy back shares, especially when they announce it. So one of the things companies do with earnings, if they know their numbers not right, how they want it to be, they'll be like, hey, we're gonna buy back 60 million in shares. 60 billion to try to give it that offset. So like if earnings is okay, guidance is okay, the thing they try to do to offset the thing that's not good is say, hey, we're gonna buy back $100 million share buyback. And you can know, when the stock is not, when the earnings is not that good, because when it's not that good, they do a big buyback. When they see something is, hey, yeah, we bought 60 billion back in share. People know that's gonna bring the stock price up. Come on, Jose, I'm smoking your ass right now. Let's go a little further. The Trump effect. So let's see this. Let's talk about this for a second, right? So watch this. I wrote this down. This is interesting, Jose. I got deep into this. So watch this. Scott Besson said something the other day on TV. He said, if nobody knows when they buy back, they say when they just say we're gonna buy back shares. All right, watch this. Scott Besson said, so right now, last Friday they said that tariffs, the courts said that tariffs were illegal. That caused the stock to go down. And then Scott Besson came on TV and said, hey, it would be a bad, and I said this though a couple weeks, I said this last week. I said, hey, if America gotta pay them damn tariffs back, man, we gonna be that much broker. Yeah. Money seen, point seen, you know what we say in the hood, bro? Point seen, money gone. Yeah. Man, y'all should have saw that look Jose just gave me, man. He don't know what that means.
Point seen?
Point seen, money gone.
Explain it real
Dice
quick.
game. Shooting dice.
You
shooting dice. The first roll, if you don't roll a 7 or 11, if you don't roll a 2, 3, or 12, then you make money or you lose money. But if you roll like a 6, 8, 10, 4, 6, 8, 10, 4. If you roll one of them, 5, 9. 6, 8, 10, 4, 5, 9. If you roll one of them, that's called a point. So that means now I gotta hit that number again before I hit a 7. Does that make sense?
Nope, but I'm with you. Bro, I'm the dude who don't even know how to play spades, so, and they could clown me in the joint, but this about 10% of the people here don't know how to play it either.
All right. So,
but we good though. Keep rolling.
7-11 on the first roll, you win money. Right? If you roll a 7 or you roll 11 on the first roll, you get money. If you roll a 2,
I'm about to say, I know that. It'd be like 7, 70.
If you roll a 2, that's called snake eyes. Right? It's just 2 dots. If you roll a dot and a 3, that's you out of here too. Or if you roll a 12, that's doubles, you out of here too. So you lose money on that, but you keep the dice. But if you roll a 4, a 5, a 6, a 8, a 9, or a 10, so that's all the numbers on the dice. If you roll them numbers, then your objective not is to hit that number again before you hit 7. Right? So that's your point. So if I shake the dice and I got like an 8 or a 4, and I roll them again and I hit that, point seen, you see the point, give me my money. Money gone. Point seen, money gone. I feel like I'm talking to...
Nah, I'm gonna do homework on YouTube. They gonna show a tutorial.
Watch Jose, man. I try not to. Shout out to my girl, Ash. She said
my
you can
girl
only
gonna
play
come in there.
taboo.
It's the ones that love you the most.
He can only play taboo. Oh, man. Jesus. Let's go. Point seen, money gone. You know how that go, dog? Point seen, money gone, dog. That was, listen, boy. Listen here. I'm recovering. I recovered from that. I was a dice addict, dog. Listen, I'm talking about running around with 2-3 pair of dice at all times. Ready, look at George say, shaking them. Listen, what's that? Shoot something. Shoot what? Shoot 5 bet shit? Shoot 5 bet 10. What's up? Shoot 10 bet 10. Shoot 100 bet 100. Bet 1,000, shoot 1,000, ain't nothing. Smoke a flower. No, Jose don't know about that. All right.
Not at all. Not at all.
All right, let's go a little further. All right, so anyway, Scott Besson says, if we got to pay back them tariffs, this is going to be a bad day in America. So watch this. U.S. tariffs have now collected up to $30 billion in August. This is the 6th straight month of increase. Over 30 billion. This is the 6th straight month of increase. Watch this. Before April, they was collecting about $7 billion in tariffs. Before April. Right? That's 23 billion cents on a month like it's coming in. Watch this. At this pace, tariffs could get up to $300 billion. That's a 400% increase. At this point, they can be putting $300 billion on the deficit a year just from tariffs. Not gonna lie. That can help us out a lot. Because it's hard to chop down 36 trillion. How you chop down 36 trillion? 300 billion at a time. What you say, Sean?
I was gonna say, like, how much? That's what I was gonna ask. How much of that deficit does that bring down?
300 billion at a time. I don't know the percent. You do the percent.
Like
What's 300 billion of percent of 300 billion of 36 trillion? Nigga, my calculator don't go that far.
Like the little E with the line gonna come up.
Yeah, error, nigga, a lot. You gotta turn your calculator sideways to get that out there. That's no way it come out. You gotta turn it sideways. You gotta get an abacus. You gotta get an abacus, dog. You know what I'm saying? You gotta get an abacus. So that's interesting, bro. But my question is this, though. Where the money at? Who getting that money? Because here's what we do know. Donald Trump's wealth has increased by $3 billion since he's been in office. So, let's go a little further.
Hey, what's up, y'all? Happy Trapping Tuesdays. This your boy Art from the 319. I just want to say shout out to for taking the time to take my question today. Shout out to all the trappers out there. Shout out to all the support team behind the scenes making this thing happen. And shout out to Trap himself. Today my question, Trap, is after taking your courses, you mentioned several different platforms that can help us become better traders. Between the Guru Focus, the Seeking Alpha, and the Bar Chart, as well as TradingView, I just wanted to know what platforms do you recommend for somebody that's getting into the buy and hold as well as the options plays. With so many choices out there, I was looking to maybe narrow it down to like 1 or 2 platforms I can really utilize to better my skills. And that way I'm not getting overwhelmed with all the information or all the different platforms out there to trade on or to get information from. That's all I got for today. Once again, thanks for everything y'all do. Salute.
All right, man, that's a good question. So the question here is, Trap, after I've taken the course, what is a what is a good place to trade on without getting overwhelmed by the information? So y'all know some of the platforms that I love to use and I recommend is E-Trade, I recommend TradeView, I recommend Seeking Alpha, I recommend Guru Focus, because that's where you get a lot of data from. Like, I like that data. But I think something that was real important that was said just now was, Trap, how do I use, what is a platform that I can use without getting overwhelmed? I personally think one of the best platforms for beginners is Webull. And I'm not getting paid for this, I'm not getting sponsored for this. And here's why. Because I've watched a lot of people inside of my community, and I noticed that a lot of them use TradeView, but a lot of the newer people use Webull because it's simple. And I went on it to see. It's really simple. It's not as gamified as Robinhood, right? So you have a little more structure over there. You have a little more meat on the bone, like I would say. And again, I'm at the point where I'm not even saying nothing bad with Robinhood, but I understand the gamification of it. Right, so because Robinhood has that gamification, it's attractive to people. Webull actually has more of it's kind of like a little brother to the bigger platforms, if I can use it in that way. So the ability to show you the percentage you got on your trade. Like, I watched some of my people be posting, I be like, that's cool right there. Seeing the little arrow go up with the percent. I'm like, oh, that's cool that they do that right there. The way that they use the charting on Webull is, I think it's a great stepping stone to get to TradeView. Whereas Robinhood, I think Robinhood just dropped some charting stuff. They just dropped that, and they're giving you that tier 2 data on Robinhood. But as a beginner, you're not gonna really understand what the tier 2 data is and all that. But the way Webull is designed is it's easier to understand, it's easier for the new investor. It's a greater, from an informational perspective, but also the way they guide you through the platform and how you don't get overwhelmed. So at some point, I think you should graduate into like a TradeView, a Tasty Trade, a Tradezilla, Tradeovate. You graduate to those. I think you don't have to get into interactive brokers yet. You know what I'm saying? Like, that's another level. But I think you can use Webull, but also it also has a great buy and hold. The way they use buy and hold is great. And the reason why I say this is because the way the interface is set up with Webull, you can create your own portfolio. You can get with them to help you create a portfolio. They also have like a pre-framed portfolio where you can say, you can just put these stocks in and then they'll build it out for you. Like, you can go to this portfolio that's already constructed and they'll be like, yep, 8%, 5%, 7%, 2%. It's already pre-built. So I think things like that truly help the new investor not just invest, but invest with confidence. And I think that's the great part about investing. I think, again, the thing about Robinhood is it's a gamified. And don't get me wrong, they building. So they building the 4% APR for having your money sitting there. Robinhood give you the fractional shares. Y'all know listen, y'all, I'm evolving. I'm really telling my people now, like, hey, go ahead. You know what I'm saying? I don't agree with it, but go ahead. Get in the game. You know what I'm saying? Get in the game. But Webull also has those same features. I just think the interface, the communication between it is such a better place. I do not recommend Stash. I do not recommend Cash App. I don't recommend none of those places. I personally say, as a beginner, one of the places that you should be going and should be using is, I like Webull because the transition from trading to investing in there is user-friendly. And as an investor, that's what you want. You want user-friendly. You don't want the handicap. You want to be able to still feel like you playing a game. Like, when I look at Robinhood and I just see buy, sell, trade, I think it's limiting you so much. The options chain not full like it should be. I just think it's limiting you so much. And it's giving, I think it's putting you under false pretense. And it's just my idea. Whereas I think when you go to Webull, you actually have a better way to see more data. And the data is what really helps you as a trader, right? The data, understanding how to use that chart the right way, understanding how to use those tools. Now, I think what I do see about Robinhood is they consistently add more tools. So I can't take that away from them. But I truly would say that Webull is 100% the way for you to go, right? And I think it's a way for you to actually keep learning. Now, here's the dope part about Webull. They are also evolving, right? The funny thing about them is they don't, here's what Robinhood beats them at. Robinhood has more marketing dollars. So Robinhood putting a lot of money into YouTube ads, Super Bowl ads. They putting a lot of money, so they are out marketing them. And I think Webull has to pick up their marketing for that platform, because if they don't, Robinhood gonna keep smoking them. But I actually think that if you want to get into it without being overwhelmed, without being hit for your money, because remember, the one thing about Robinhood that they do is the spread is what they knocking your socks off with. So that's what I got to say about it. I think Robinhood is a better play. I think Robinhood is a cool play, but I think Webull is just the answer. And the one thing I will say, Webull has a better customer service than Robinhood. If I'm not mistaken, you can actually call Webull. They got a number. Robinhood don't got no number. And if you got, if you got 10,000, 15,000 in there, and you saying, I can't call you, y'all know how I go, yo. I don't want to email you about my money. You can't feel the frustration through the email. You feel the frustration when I call you. Hey, my money, you messed my order up. I want to know what's going on. You feel that? So my recommendation as a beginner, someone's new, rock with Webull. I think that's a good thing. I think Webull, yeah, you don't need that interactive broker at all. You don't need that interactive broker at all. My guy. All right, man. Shout out to my guy, Mr. 2 Weeks Out. I know he'll love this one. You heard me? All right, man. Certified Trapper of the Week is Marcus Garvey. Marcus Garvey was a fearless Jamaican-born leader who ignited one of the most powerful movements for Black pride and global unity in history. As a founder of the Universal Negro Improvement Association, he championed economic independence, cultural pride, and the racial idea that people of African descent should reclaim their destiny and own their own terms. Right? He built businesses. Right, launched the Black Star Line to connect the African diaspora, and declared himself the provisional president of Africa, daring to envision a united sovereign Black empire. Despite fierce opposition from government, rival activists, and systematic forces, Garvey stood his ground. He was a master orator and a strategic organizer, and a symbol of unapologetic Black ambition. His legacy lives on in every movement that fights for dignity, self-determination, and legacy building. The Man with the Hat. If you never read that book, it's a really good book about Marcus Garvey. Let's go.
Marcus Garvey was born into the racial inequities of the colonial system of Jamaica. He decided to fight for change when he read the autobiography of Booker T. Washington, an educator whose message was self-reliance and self-help through education and economics.
All of those things actually make sense to Garvey in Jamaica. They make sense to a Garvey who's wrestling with the effects of colonialism, racial self-hatred and self-loathing that the colonial system imposed upon Black people in Jamaica.
In 1914, while in Jamaica, Garvey organized the Universal Negro Improvement Association, the UNIA, to build up racial pride and develop educational and economic opportunities for Blacks.
He had these high aspirations for building this universal, this worldwide organization to empower people of African descent.
2 years later, Garvey came to the United States and established the UNIA in New York City's Harlem.
There were at least 700 chapters of the UNIA in the United States by 1921 through 1924. There were over 1,000 chapters of the UNIA throughout the world. Garvey was a master showman and a master organizer.
Marcus Garvey was a Caribbean American who would come to reshape the meanings of African America.
Garvey spoke boldly about self-respect and pride in African heritage, a message that appealed to many African Americans frustrated with the violence and disenfranchisement they faced in the United States.
Marcus Garvey obviously has one of the largest mass movements in the 20th century. Definitely the largest of people of African descent.
Garvey and his followers held demonstrations and parades in Harlem to encourage a sense of dignity and identity as a noble people.
Garvey would have these huge parades and he would dress up, and part of that pomp and circumstance was saying, we are a people and we are a coherent people, and then to be a coherent people means that we have rights and we can create a nation.
Shunning integration, Garvey preached a separate African community, complete with black businesses and institutions.
Garvey encouraged the development of black entrepreneurship through the Negro Factories Corporation, which was modeled after Booker T. Washington's National Negro Business League.
The UNIA saw the importance of economics and independent institutions as fundamental to freedom. Garvey was building a set of institutions that are about creating a kind of peoplehood and a nationhood here in the United States.
Part of Garvey's plan was for some African Americans to return to Africa and create a nation there. It was known as the Back to Africa movement.
Marcus Garvey electrifies much of the African American population throughout the cities of the United States with his Back to Africa movement. Race, men, and women unite, Garvey would say. We are mistreated here, we're going back to Africa. Rise up, ye mighty race.
Garvey started a steamship line called the Black Star Line for trade with Africa and the Caribbean, and as transportation for people returning to Africa. The business failed and brought trouble for Garvey.
In 1923, Garvey was arrested for mail fraud because of the sale of the stock of the Black Star steamship line through the U.S. Postal Service. Garvey personally was not involved in any kind of corruption or theft, but unfortunately he was not a good judge of business character.
Marcus Garvey was convicted and sentenced to serve time at a federal penitentiary. President Calvin Coolidge later commuted his sentence, and Garvey was deported from the United States in 1927. He returned to Jamaica as a hero.
Garvey understood that building a black protest movement, of black pride, of black ownership in business and self-respect, was also a cultural endeavor. And there was a sense of community and cultural identity and an affirmation of African heritage. All of these were part of the UNIA. And it was an extraordinary spiritual and cultural movement.
Marcus Garvey's ideas inspired future black nationalist movements like Nation of Islam, Student Nonviolent Coordinating Committee, and the Black Panthers.
Hey, bro. Come on, man. Pioneers, bro. Pioneers, bro. I like pioneers, bro. We out here. Let's go a little further, man. Let's get into it, man. Here, man.
What's going on, Trap? How's it going, Jose? First and foremost, I just want to say I appreciate you guys for taking my question, and your input is highly valued. I wanted to start off by saying I've been rocking with you guys since last year, and I followed you on YouTube, and I've been watching every video that I can, trying to absorb as much knowledge as possible, and it really changed my life. My question today is, I have been purchasing shares of the SQQQ because I want to inverse leverage my account when it's time for a down market. So I'm currently sitting at 300 shares of the SQQQ, and my average cost is sitting at $17.10. Now, with that being said, I also have 10 contracts of the SQQQ with my strike price of $20 and an expiration at December 19th, 2025. My delta is sitting at 0.394, and my theta is at negative 0.0113. It's a little down right now, so I'm down 31.6%, but I know quad winching's coming up September 19th, so I'm anticipating that because it's the inverse of the NASDAQ 100, that it's going to go up and I'm going to get my money back, so let me know what I should do in this situation and what would your input be. I appreciate you guys.
All right, so I'm gonna call this glasses trap. Trap with the glasses. That's what we gonna call this one. All right. First of all, man, salute, King. Appreciate you for tapping in. Here's what I will say about that. I get the idea, right? You see the market. You double down on it. You have 300 shares of it, and you got 10 contracts. You double down on it. I can never tell a person to take a loss or not, because I can't do that. What I will say is this. We are in September, right? So you have a high probability of seeing some type of downturn. So here's a few things that's working in your favor. One, we got markets almost at all-time highs, so you know for a fact there's a pullback somewhere in there. The problem is you already down 36%, so you need an extensive pullback to recover. You need something like a 3%er or 4%er to recover and be on top of that. Then you have 300 shares. But also the thing you can look at is the only time I do any type of, so in my mind, you did it trying to get on top of the month of September. Right, remember we say something, history always repeats itself. History don't always repeat itself, but sometimes rhymes. Right, so again, all-time highs here, then you have quad winching coming up, then you have some PCE, CPI data coming up this week as well. So technically, you have an opportunity, but you went with SQQQ. So in case y'all don't know what that is, we had something called when they panic, we eat. And what they panic, we eat it was for people who didn't want to really get in the options market, but you can pay inverse the leveraged ETFs. So what inverse and leveraged ETFs are, it's simple. An inverse ETF is when the market goes down, you go down, you make money without being in the actual option because there's options and futures calls wrapped around that in a package. Does that make sense, Jose? So what happens is it's an instrument. So everything on the market is called an instrument. If it's an instrument or either it's called a derivative. So that's what they call options, derivatives. So the SQQ is a package. So it's a bunch of short calls. It's a bunch of puts and it's a bunch of futures to the downside wrapped inside of one package in a fund, right? But what happens is, because he got the SQQ, what happens is if the NASDAQ goes down $1, he actually makes $3 because he's triple leveraged. If the NASDAQ goes up $1, he loses $3. That's what triple leveraged is. That's an inverse. Now, if it's not an inverse, then if the NASDAQ goes up $1, if it's a triple, then he makes $3. If the NASDAQ goes down $1, he loses $3, right? So that's what inverse and leverage ETFs are. If it's leveraged, it's going up. If it's inverse, it's going down. So he has the SQQQ short. So that means, and he got the triple leverage. So now for every $1 that the NASDAQ goes up, he actually losing money. But his goal was to bank on, hey, if this September, and I know we truly have a rough September normally, then I want to get ahead of it. Now, if he got it on the first day of September, he was like, oh, this is about to go crazy. But what happened was even the first day of September, the first trading day, it actually turned around at the end of the day. So some things working in your favor right now. Some things are working in your favor right now because you have some things going up. So I'll say you got two ways to do this with this, right? You can either hedge it, right? You can go the opposite way, or depending on how bad the loss is, you could take it, but the goal is, I don't want you to be working on hopium. And hopium is simply saying, I hope the market do this. Another thing you could do is, and again, it's not advice, I'm just giving you options. You could average down into it, but if you average down into it, you add more money to a losing position, your price will come down, and then you would need that thing to strike. Here's what I will say, the best case scenario. For me, the only time I do that is if I see the market is already in a downtrend. If the market is already in a downtrend, then it's a perfect time to play that SQQ because now you are actually going along with the trend. But if the market is truly in an uptrend, now you're trying to buck the system. That's called counter trend trading. That's always going to be kind of painful because now you need something drastic to happen for it to go your way. So that's just kind of how I don't want to necessarily tell you take the loss because I don't, even when I did the Oracle play today, we put the SML play in today, and I told my people this in the group. If losing 50% of this trade alters your life, don't take this trade. If losing 50% or 30% of this trade decides on what you eat tonight or what you doing, or if it's really going to hurt you in a really bad way, don't take this trade. Right? With the Oracle play, the reason why I told my people, don't follow me with this play, because I knew I was basing this play. It wasn't based off technical analysis. It's because I know that Larry Ellison is an animal. And guess what happened, y'all? I'm going to be real with you. We really got lucky in that play. He had a double miss. He had a miss on the top and a miss on the bottom. The only other company I ever saw that would do that was Tesla. Miss on top, miss on the bottom, bad guidance, stock still runs. I have no idea why. Sean said this thing mad as hell one day about it. I'm like, bro, how the hell they did that? So honestly, we really got lucky on that play. But that's why I told my people, hey, don't get in this. This is not based off technical analysis. I didn't break this down. I just got confidence in that CEO. Right? And even me, my hedge on that was I didn't go big. For me, it was like, I'm gonna just get 10 contracts. If I lose that, it's no pressure. It's like 15, 20 grand. I'm not even saying this to say about my money situation. I was just like, if I lose 20 grand right here, I ain't tripping. If I lose 100 grand right here, I'm pissed off because I knew I shouldn't have did it. So I always say, treat a gamble like a gamble, treat an investment like investing. You're going to have those moments sometimes as a trader where you just feel it. You're like, I just feel it. And that's a 50-50. Right? So I literally told my people that. It just worked out in our favor. But I do that every blue moon. It's every blue moon I might do something like that. So I'm saying that to say you got ahead of the curve, it didn't go your way, and now you're banking on PPI, CPI data, you banking on, but the caveat to that is you get PPI, CPI data, and then right after that, you get a Fed decision next week. And if the Fed rate cut is what they think it is, that drives the market, and now you waiting on Kawhi Winchon. So it's a lot of variables that you got to play to do that. And so now you got to sit back and evaluate, bro, is it right for me to 36%? You probably, for 36%, especially if it ends at the end of this month or something, because I didn't remember him when did he say when it ended? December 19th. Oh, man. You already down 36%, and then you played it out to December. That's a tough one, fam. I'm not going to lie. Because the market goes up more than it goes down. When it goes down fast. We knew it at an all-time high right now. We know you got Kawhi Winchon coming up. You know you got CPI, PPI coming up. As much as I want to tell you to hang it out, we're still in the early phases of September. We're still in the early phases of September. I will tell you this. In order to break even, you probably need about 60%. From a down 36%, you probably need about a 60% recovery. So that means another thing you got to look at is, what is the VIX doing? You need the VIX to be on top of like 17 or 8. You need the VIX to be at like 18 and even. That's the pressure you need. So we need a couple things to happen, man. So I'll say this. Here's my suggestion for you. Give yourself a cutting price. If it gets to 50%, you cut it. If it gets to 50%, you cut it. That means you more than wrong. You know what I'm saying? And even though you got December on your side, you got a triple leveraged ETFs, which means it's really against you, and it's really against you fast. It ain't like you got a regular one. You don't put gasoline behind it. You know what I'm saying? So in my mind, give it to 50%. If it don't give you no action by 50%, go on and cut it, man. You know what I'm saying? About 50%, now you gone. So that's my idea, bro. I hope I helped you out. That's a tough situation. But sometimes we put ourselves in tough situations, and we got to box our way out of it. You know what I'm saying? So I'll say that. Give yourself to 50%. At 50%, you don't get no act right, let it go. That's my advice to you. That way you give yourself some time. You see if something turn around on you. If it don't turn around on you, go. So that's my goal. That's my goal. That's what I got. All right, this is why the U.S. cannot be ignored. Now, I want to just walk y'all through this right quick, right? The U.S. has just 4% of the world's population, right? But they have 24 million Americans that are millionaires and growing. Nearly 4 in 10 Americans worldwide, millionaires worldwide. 2/3 of the world's stock market value is in the U.S. The U.S. bond market is $58 trillion, which is 40% of global total. And the U.S. dollar is involved in 9 out of 10 transactions in the world. I'm just saying, yes, we understand BRICS, yes, we understand all this, but here's what I'm saying, y'all. America is the easiest place to make money. It is the easiest place to become a millionaire. It is the easiest place to become a billionaire. It is the easiest place to change your financial situation. Now, do we still deal with racism? Hell yeah. Do we still all kind of BS? Hell yeah. But one of the things I tell people all the time is focus on God and then get your money, people some money right next. That's why we say God and money. Get your money. It's not saying money is a God. It's saying God first, then get you some money. Because once you put God first, you tune out everything that you can't handle. Everything that's outside of your realm or whatever, you tune that out, and then you say, hey, I got God first, I ain't being greedy, then let me go get me some money. Because we know there's no place like America to get you some money. Let's go a little further, Jose. The American dream is the American nightmare. Let's go.
The American dream in 2025 cost a whopping $5 million. This is $600,000 more than it did last year.
We're talking about retirement, healthcare, owning a home, 2 kids, sending them to college, having a new car every 10 years, having a pet. Thing is, as you know, if you make the median income throughout your whole working life, 25 to 65, you get to around $2.3, $2.4 million depending. There's that gap there.
How does that compare versus last year? It went up $600,000?
But we also added a little bit more around healthcare. We know that people are thinking about premium healthcare in case something happened beyond the very basics. So that's very important to American families. That is about $414,000 over a lifetime. And you look at retirement, $1.6 million. That would give you around $67,000 to $68,000 a year for 20 years after the retirement age of 65.
So how does that compare to sort of the lifetime earnings of most Americans?
Yeah, it's about $2 to $3 million higher than most people are going to earn, which is why we need to invest. How do you fill the gap? You fill the gap through investing, through saving, through owning assets.
That's right. And so before I get into that, I want to say something. That's just not by chance, yo. That's called structural dominance, structural financial dominance, y'all. Right? Love it or hate it, the U.S. system is the backbone of global wealth creation. I'm going to say it again. Love it or hate it, the U.S. financial system is the backbone of wealth creation. Now, you can debate politics for sure. But the math is undeniable, fam. And the math is the U.S. is still the center of gravity for money. Ignore it and ignore the game itself. No matter how much you don't like America, no matter how much you get pissed off at America, here's what I'll tell you. And you do what all these other countries do. You get money in America and you go live somewhere else, if that's what you want to do. That's why you think people in other countries use Forex. That's why at first I didn't understand Forex until like the last maybe 2-3 years, and I started really being like, wait, hold up. This is how the money changes hands right here. Like the Forex system, so then I had a different respect for Forex traders. It took me about 3 years to really, because I was all stock. And then I started learning how powerful the Forex game is. I kind of was tempted to start trying to trade it. I ain't gonna even lie to you. Ain't nothing like trading some money. You know what I'm saying? I'm not gonna lie, I was kind of tempted to trade it. You know what I'm saying? But I started realizing how powerful the Forex market is. Really, when we talked about the carry trade a couple years ago, and I was like, oh, when I realized that the yen, the Japanese yen was what it was, and the American people was getting the money and then putting it into foreign exchange and then trading it. Then I was like, oh, that's the swap out. You know what I'm saying? So you think about it, banking, institutions, hedge funds, all of them are trading more in the. I was like, oh, this it. I didn't realize that. I'm just keeping 100% real. All I understood was stocks. Understood how futures interacted with stocks, but I just stayed away from it. It was like stocks. Once I started realizing, that's what put me on it. Once I learned about the carry trade and I realized that the countries and the institutions, they putting the money in Forex so they can change it over to the American dollar, I said, oh, this it. This it. And I was like, hey, I might start trying to trade Forex, you heard me? But hey, let me stick to what I got. You dig? Because Forex is crazy. Them boys be getting to it over there, you heard me? Them boys be getting to it over there. But yeah, so that's it, man. So you just can't deny, American dollar. You can't deny it, man. All right, let's get into it, man. Donald Trump lost money during his first term, out of office. He found a formula for profiting off politics. Now he's piling up billions. Presidency boosts his net worth by $3 billion, and he ain't even made a whole year yet. I want you to think about that. He ain't been in office a whole year. He up $3 billion. His sons just hit $1.3 billion with the crypto fund they created. I'm just saying, yep, I always say this to all of us. Once you cast your vote, you have done your civic duty. Go get back to the money. Because the one thing we know they gonna do is get to the money. We got politicians that got net worths. Bro, you got politicians that got 8-figure net worth and they only make $200,000 a year. Listen to me. We got politicians that got 8-figure net worth and all they make is $200,000 a year. With benefits. We got politicians that's outperforming Warren Buffett. We got politicians that's outperforming the world's greatest investors. We got politicians that's outperforming the world's greatest traders. What you mean, fair? That shit don't exist here. You got politicians saying, yep, man, go ahead. Ban us from trading. We ain't tripping. We done already made our money. Ban it. I done already made my 20 million, 40, I'm worth 40 million. I'm ready to retire. And I ain't mad at them for doing that. Guess what? I gotta play the game. The game ain't never been fair. The game ain't never been fair. I'm gonna go a little further too. The game ain't been fair, especially if you black or brown in America. It really ain't fair to you. So you gonna spend time complaining about what's not fair, or you gonna spend time learning the game so you can equal the playing field? I might don't go get $3 billion in a year, but guess what? We done did $4 million in a year out the market. I might don't go get $3 billion in a year, but guess what? I'm gonna change your mind frame on that. Guess what? If you stay in the market long enough, you can make that possible. How, Trap? Because the same thing it take to make $10 in the market in a trade, the same rules apply for $100. And the same rules apply for $1,000. And the same rules apply for $10,000. And the same rules apply for $100,000. And the same rules apply for $1 million. And the same rules apply for $5 million. And the same rules apply for $10 million. And the same rules apply for $100 million. And the same rules apply for $150 million. And the same rules apply for $200 million. And the same rules apply for $1 billion. The only thing changed is your emotional capacity to do it. The formula don't change. The same thing I did to make $10,000 in the play was the same thing I did to make the $1 million in the play. I didn't change nothing. As a matter of fact, I said, oh, the market is down. I'm about to load up on this NVIDIA play. All right, let me say something to you right quick. The best time to make the most money in the market is when the market go bloodshot red. It's the best time. When the market go bloodshot red is the best time. I promise that's all I did. It wasn't even nothing special. I didn't change the formula. I said, oh, it's down like that? This was right after the split. I said, bet. I took the same formula, put the leap play in. It was an NVIDIA $95 call. I put the call in, stretched it out to maybe 7, 8 months. It did it in 3 months. Woke up one day, I said, oh, that's it. You trying to make all the money while the market at an all-time high. When market's at all-time highs, small your positions down. Wait till that thing pull back. When that thing pull back, go and load the boat on something you really like. That's why I love fundamental companies, because when the market pull back, they be the first ones to run up. That's just the game. The formula don't change, y'all. You just got to get used to not chasing and being in position. Let's go a little further, man.
Donald Trump has added billions to his family's wealth by launching his own cryptocurrency and investing heavily in the industry. Meanwhile, Trump is instructing the government to ease up on regulating crypto. The SEC is dropping major lawsuits against crypto companies. The Department of Justice terminated a team focused on crypto crimes. We are way beyond conflicts of interest now. This is corruption, plain and simple.
Donald Trump lost money, man. You have a lot of people that's trying to point the finger and so all that, and all I'm gonna say is, bro, get in the game. Play the game. Let's go a little further, man. All right, watch this, man. This the one, man. Tesla, $1 trillion. What does it mean? What does it take to become the world's first trillionaire? Man, look, Elon got the blueprint. The Tesla board has set Elon Musk a $1 trillion compensation plan. But only if Tesla sells 20 million cars, deploys 1 million humanoid robots, launches 1 million robo-taxis, and pushes annual profits to $400 billion by 2035. That's not just a company plan. That's literally a roadmap to rewriting the entire industry, y'all. Right? We talking autos, we talking robots, we talking about transportation, we talking about AI. If successful, Tesla market cap could be $8.5 trillion. Larger than the GDP of almost every nation on earth. This ain't just about Elon Musk's paycheck, y'all. It's about Tesla betting the future on mobility, automation, and wealth creation. The question for us is, do we invest in the vision or do we miss the ride? Listen to me, y'all. These people smart. Let me tell you what they did. These people understand that this dude, one, is brilliant, but two, he got ADHD. He get bored fast. Let me tell you why. Because after you become the world's richest man, what else you got left to do? Go to Mars. You go to Mars. But guess what you do as a company? You know what it takes to get him back on planet Earth. Hey, you want to be a trillionaire? Tell me a little bit more. I want you to think about that for a second. After you become the world's richest man, ain't nothing else in business gonna excite you. I'm going to Mars. I'm trying to figure something else out. Ain't nothing left for me to do here on Earth. I tried politics, that ain't really worked too well for me. That's too messy. I ain't built for that. But I can go to Mars. But guess what? When you go to Mars, you leave this company. You distracted. So what do they say? Hey, you want to be a trillionaire?
Give you that T.
Nobody can catch you with that. And guess what? We gonna give you 10 years to do this. What I gotta do then? Okay, this is what you gotta do. You gotta sell 20 million cars. You gotta deploy 1 million humanoid robots. We just talked about the robots coming. They just gonna get this man $1 trillion. You gotta put 1 million robots, humanoids, in the earth.
He gonna say, hold my beer.
You gotta deploy 1 million robo taxis. Listen to me. And you gotta push 400 million in profit through the company in 10 years. That's gonna get him out of Mars. You know why? There's a bigger goal at stake. Ego. Oh, I'm a trillionaire. I'm gonna play to your ego so I can get rich.
I had to look it up. I said, so, because again, a T is kind of unfathomable. So I put it in 1 million seconds is only 11.5 days, right? 1 billion seconds is 31 years, 8 months and 19 days. 1 trillion seconds is 31,700 years.
So it made no sense. So watch this.
I'm gonna give him dollars.
You gonna come up with that. Watch this. You gonna make a way to get what you want. And guess what he gonna do? He brilliant. One thing you can't deny is dude brilliant. He gonna step back and say, okay, what do I gotta do to get this trillion? He gonna reverse engineer it. He gonna go hire the smartest people he can. Watch what this stock do the next 10 years. Kathy Wood's about to be a genius all over again. She said Tesla gonna be a $2,000 stock, bro. This just turned it up. This just turned it up right here, bro. This just turned it up. Bro, he going after that. They had to put something in front of him to make him focus. Ain't nothing gonna make you focus like $1 trillion? Oh, shit. I'm locked in. He about to go find that pill from the movie, Limitless.
Or make it.
He gonna make it. I need something that's gonna keep me up, I'm telling you. This just turned it around, bro. If he don't get it, he gonna die trying. Think about how big that bet is, though. I'm willing to put $1 trillion in front. Bro, not not 500 billion. No. Bro, you're gonna be wealthier than companies. No, companies. Not just countries too, for sure. But like you're worth more than companies on the stock market, bro. Big companies. The company itself gonna be worth $8 trillion. Meaning, bro, you probably gonna pass up NVIDIA or something, I don't know. Bro, 1 million robots? 1 million robots. 20 million Tesla cars, bro. 1 million robo-taxis. I'm gone. All right, man, it's your boy, the Wallstreet Trapper. Just want to tell y'all, welcome to an amazing show, man. We love y'all. We appreciate y'all. Each and every week, man, we can't do this without y'all. We can't do this without y'all. Y'all give us the energy to do this week in and week out. We do this. We try to make the show better each week. We try to dig into our information more each week. We try to make sure we make it invaluable for you each week. We try to earn your support. We don't expect you to just give it to us. We want to earn your support. We want you to say, hey, I love watching Trapping Tuesdays. I'm going to learn something every week from Trapping Tuesdays. Trapping Tuesdays is where I get my financial gospel at. We want to earn your loyalty by giving you massive value and helping you see the market, but also seeing yourself different, knowing that you are capable of operating this machine. They got somebody on the Patreon that said every time they make a play, and I just love when they do it. They make a play, they post their money, and they say, bro, I am capable of operating this machine. I tell you, every time they post it, I be so excited when I see that because it lets me know, man, that we getting through, y'all. Man, don't let nobody trick you out your spot, man. That's your spot. Don't let nobody trick you out of it. They got 1 million, 2 million, 100 million with your name on it. And if you let them people trick you out your spot, you done gave somebody else your profit. That's yours. So man, make sure y'all come join the Patreon. See the link in there. Also comment. Also come join Trappers Anonymous. We starting something new in Trap Anonymous. What we doing? We paying. I'm giving them money now. Yeah, so now we doing something for, if you can create a portfolio that beat the market, a 1-year portfolio, the grand prize is $1,000. But once you do it, it's in January. Every January, you gotta build a 12-month portfolio. By the end of January, you gotta have your portfolio in. I got my team members ready. That's $1,000. If you can beat the market every quarter, that's another prize. And best presentation. Every Sunday we do presentations. Whoever get the best presentation that quarter, they get a prize, a cash prize. If you get it 2 quarters in a row, that's a double cash prize. You get it 3 quarters in a row, it's a triple cash prize, plus a one-on-one call with me for 30 minutes. So we putting that in Trappers Anonymous because I won't just lay down a we gotta lock in on these fundamentals. So come join Trappers Anonymous if you really want to just focus on the fundamentals. You really want to learn how to be a fundamental specialist. That's what we're doing in Trappers Anonymous. Come get your merch. It's on fire right now. And make sure you subscribe to this channel and the Wallstreet Trapper channel. Last but not least, make sure you go to Apple, Spotify, Google Play, and all them other podcast platforms to download that. That means a lot to us when y'all download those episodes, and it means a lot to us when y'all like and share these episodes. That means so much to us, y'all. I love y'all. I appreciate y'all. We out.